Hey guys, welcome into the video. It's the Dividend Bloodhound and today we're talking about BFT Stock, Foley Acquisition 2 and its merger with Paysafe. Absolutely fantastic company and SPAC by the look of it. If you know me and you've seen me before, I love picking SPACs that are going to go on and become fantastic businesses. Tattooed Chef is just one example of that, and this is another one. You can ride out and make a lot of money out of SPACs by just riding the hype and then cashing out and doubling your money essentially. But these companies, some of them are absolute diamonds in the rough, and I really want to select these, buy in at the bottom level so I can make a hell of a lot of money over the long term, and I think this company is just such a company. Today we're going to delve into the Paysafe BFT Foley acquisition investor presentation, and I'm going to explain to you exactly why I'm so bullish on this company and why I'm going to almost literally go all in on it. Please remember to like and subscribe to the video and to my channel if you like what you see. Stick around after the intro and I'll catch you in the investing presentation. See you there. Hey guys, so welcome into the presentation. Here we have Paysafe's investor presentation released in December 2020. So we've got some real great key information coming out here. Now the first thing is your presenters of the actual investor presentation itself. You've got the chairman, Foley, Bill Foley should I say, the chief executive and director Philip McHugh, and then Izzy Darwood, the chief financial officers. And then if you can see just below there, they have been involved with some real fine companies in the past, such as Barclays, Wells Fargo, Citibank, and then obviously billionaire Bill Foley has got his own empire that he has built himself. So a quick transaction overview, you can see here that we've got some serious growth lined up for this company. There is a lot of competition out there for the sort of thing that the Paysafe does, but it's really started to establish itself as a real competitor to the likes of PayPal. And we've got some real strong growth rates there, 17% growth, 13% growth from 21 to 22, which is really strong. Bill Foley has obviously had a lot of success in the past, and we can see he's got a strong history of value creation there, increasing values in companies almost thousands of fold over. I mean, take a look at FIS there, 2.5 billion in 2006 to a current valuation of 91 billion. He seems to have a rinse and repeat approach to this, taking companies that are worth, I mean, the one there, Fidelity, 3 million to 10 billion. That is absolutely enormous. This guy knows exactly what he's doing, and I've got no problem at all in putting my money behind him if it's going to get that sort of result. That's absolutely fantastic. He has an award-winning, game-changing strategy, as you can see here. We've got project savings, cost revenues, and growth strategies, winning in iGaming over in the US. It's a market leader in that approach, and an M&A strategy as well. Got 4 major steps towards value creation. He has done such a really fine job of doing this in terms of creating awesome value over in the fintech sector. And ultimately what the acquisition corp was trying to get hold of is a rare attractive base of companies, the perfect fit to the Foley playbook, which they absolutely found, and then strongly positioned within its industry. And that is something, I know I'm nothing compared to Foley, don't get me wrong, but that is something that I look toward to gain as well. Because with Tattooed Chef, I wanted a company and a SPAC that actually exists and it's got a tangible product, so should I say, and a product that's actually on the market for people to buy and for people to use. My issue with EV companies, although I am an investor in highly on it, has to be said, is that all of these are offering like almost Mickey Mouse sales ratings, and they've got all sorts going on, apparently huge order books, but where's their product? It doesn't exist yet, and they don't even have a factory yet, and so you're going to be waiting a long time for some of that revenue to be generated. Whereas with this company, with Paysafe, they have got customers, they've got products already, they are already expanding in the sector, and that's what this money is towards. It is to take a company that already exists and take it to the absolute moon, as we saw in the start there, taking a company that was worth 3 million all the way to 10 billion. That's insane. That's the sort of return that I'm looking for on my investments too. So Paysafe is a global pioneer in digital commerce. It's highly differentiated between B2B and B2C, the global network. It takes payments and is a payment processor, much like the likes of PayPal. Most people will have used PayPal out there, and a lot of people will have started to see Paysafe popping up now. I know that I've used it on my fuel cards that I've been using when I've had to transit around for my work. And then some of the big numbers here at the bottom, we have 103 billion of total volume, 1.5 billion in organic revenue, 11% compound annual growth between 2020 and 2023, really good double-digit growth. Same with the organic adjusted EBITDA, that's a 17% growth rate, and then a 30%, exactly the same in 2021, but from 2020 to 2023 overall, an average of 17%. That is absolutely excellent. So it currently has 3 segregated and integrated solutions: Paysafe digital wallets, iGaming and its cash network, and then independent merchants over in the United States for integrated processing. Then if we have a look at the bottom down here, we can have a look at just who uses these services already. So on the Paysafe digital wallet side of things, you've got DraftKings, Bet365, William Hill, Betfair. All your online casinos and betting companies are there. Then Paysafe eCash, you've got Twitch, Spotify, Fortnite, huge within their sector, all using Paysafe services already. And then exactly the same with the integrated processing, you've got DraftKings again, MindBody and Empower, the utility provider. All fantastic companies using Paysafe services already, which is a real massive thumbs up. And then if we come down to the scale and the financial profile side of things, we've got 441 million in terms of organic revenue in the digital wallets, 318 million in eCash, and then another 764 million in integrated processing, which is absolutely excellent. It is growing nicely. You can see all 3 of its prime pillars are growing as well. So it's creating itself a awesome network to essentially take a little bit of money from everybody's transactions in eCash, digital wallets, e-commerce, integrated solutions, and proprietary APMs and scaled SMB platforms. It wants to get to such a level where it is competing directly with PayPal, and we'll come on to that later down the sector. So they are a global leader, as I mentioned earlier, in iGaming, with over 1,000 operators and a 12% compound annual growth rate expected from 2020 at 77 billion up to 135 billion in 2025. And then over in Canada, we've got exactly the same. They cover 100% of the market here, and they are expecting again a 15% compound annual growth rate from 1.2 billion in 2020 to 2.5 billion in 2025. And then in the United States, that is a huge market to crack, of course. They launched in 2013, serve 12 states at the moment, but have over 60 operators representing 75% of the market. And the compound annual growth rate expected here is enormous. 3.4 billion in 2019, growing 55% compound per year to 2025, 55% overall from 24 billion to 47 billion, absolutely huge. Moving on to the cloud strategy, and we know, and the cloud technology, we know that the technology sector is growing and developing a fantastically fast rate. Cloud technology is where it is at the moment. All of the huge players in the sector are now looking towards this or are massively investing in it as it is. That includes the likes of Microsoft, Amazon, IBM, all of that side of things. Of course, PayPal will have its own answer as well, but they're trying to leverage as best they can and take their section of the market for themselves. They've got a huge, highly developed portfolio of companies and countries that they work with. As you can see there, they've got licenses to operate all over the world. Over in the United States predominantly, quite heavily, but also there's places and have been licensed for e-money over here in the UK, the FCA, and also over in Switzerland, which is also a massive country to get that sort of thing in. So the playbook is, of course, to grow a repeat business and garner more custom over time, which is obviously exactly what any business wants to do. But through the word of mouth, through offering a fantastic service, that is exactly what this company is going to do. And as more and more customers arrive, that means even better value creation. We've got huge growth opportunity, as you would expect with any SPAC, 120 plus markets in the world, which means that is a fantastic growth opportunity for all investors. Foley, of course, as we've seen already, he has a proven track record and a proven strategy to take these companies to the next level. So we have platform integration, accelerating existing organic growth strategies, which they already have. This, you got to bear in mind that this company is already a company that's doing particularly well as it is. This investment from Foley acquisition is only going to take it to the next level. They obviously want to win and consolidate their position in US iGaming, and then a M&A strategy going forward as well. This, combined with annual growth rate repeating year on year, gives the opportunity to get 100 million in adjusted EBITDA per annum, which is absolutely fantastic, using 5 different prongs to achieve this that you can obviously see here. They are already a proven leader in the US gaming market, as we've already alluded to. The current market in 2019, 3.4 billion. Great case scenario in 2025, we're expecting up to 24 billion. And then in a 52% compound annual growth rate going up to 47 billion, which is absolutely huge. In the B2B payment and acceptance and processing, in the middle over there, you can see that Paysafe is well on its way to matching with PayPal. Then you've got the likes of Visa and MasterCard in there, all being beaten by Paysafe as it already is. And then as we can see on the right hand side, it has loads of gaming customers already, and some of the big heavyweights that you will probably recognize, the lotteries, the national lotteries, and DraftKings already there as well. You've got a high growth, profitable markets here for the company to use. They've got all sorts of sectors to be able to develop into. You've got social media on one side with Monsense, Twitch, Spotify, YouTube. Got gaming on the other with Fortnite and Stadia, then property management, pay lease, rent track, and then wellness membership as well. So because this company is so diverse, it gets loads of its fingers in loads of different pies essentially, and it can extract revenue in all of these different categories, and it can leverage this to gain even more money as the investment and as Foley's strategy starts taking hold, and this is going to increase the share price massively over time. So we have significant opportunities, as mentioned, across all of the sectors. You've got 300 specialised wallets that globally lack scale at the moment. They're going to consolidate and expand upon this. The e-commerce integration, they're going to get out to obviously even more businesses to provide their payment and tracking services. eCash, they're trying to get out into even more geographical targets. And then the complementary iGaming services, they want to again further integrate and make themselves indispensable, should I say, to the gaming sector. Financial performance has been absolutely fantastic thus far. They have double-digit growth as it is. If we take a little look down here, we've got exactly what I'm presenting to you, exactly what you can see there, a compelling investment opportunity. Got strong growth, 11% organic growth expected over the years 2020 to 2023. Scalability, absolutely enormous. 103 billion in 2021 was the transactional volume, and the company achieved 1.5 billion in organic revenue is expected in 2021. And then they have strong cash conservation, so they got a asset-light business model that does not require a significant capex or balance sheet adjustment, so they can just carry on as they were. And they've got an 80% adjusted cash conversion margin expected in 2021. They have exceptionally high margins, which is great for a company just like this, with margins of 30% at the moment, going up to 35%. And that is because this company, essentially it's all almost virtual what they're offering, so it doesn't cost a great deal. Once they're the market leader in it, it doesn't cost a great deal to maintain. As we can see here, there is the consistent double-digit growth from 2018 to 2019, 12%, and then we've got from 2020 to 2023 expecting approximately 15%, and then the organic revenue is exactly the same, essentially 13% from 2018 to 2019, and then 11% from 2020 to 2023, which is obviously exactly what we want to see, and a safer, less risk investment for this company. They have great leverages, growing at scale, of course. They're looking at the charts does that for you. To be fair, you can see that year on year it is growing, and they're adding their little bit extra each year as they factor in that significant growth. So you're going from 30% through to 36% margins, and then because of that in 2023, that's where they're going to make the most money. As you can see there, they're diversified all the way across the world. So through 3 pillars, as you can see there, processing, wallets and eCash. Diversified by geography in terms of Europe, North America, and then the rest of the world. And then they're diversified vertically by iGaming, SMB, and other emergent verticals. They're sustainable. They have an awesome business, as you can see, and it's sustainable even in the midst of a global pandemic. They still are able to garner significant revenue, and that is exactly the sort of thing that you're looking for as an investor. You don't want a company taking a massive hit to its revenue while you're trying to invest in it and essentially grow your money. This would eventually hold them up. So seeing that they're sustainable and they can continue growing and continue taking in revenue, that is a fantastic thing to see. You can see here that they've got a asset light, so they've got 500 plus BPS. The organic EBIT margin is absolutely huge. They've got an 80% adjusted cash conversion margin as well, which is, for a cash company, absolutely excellent. This is how companies make such a significant amount of money, because they're just handling cash, and a lot of the time it is just numbers on balance sheets transferring between accounts, and it doesn't, essentially, once you've set that process up, it doesn't cost a lot to maintain. So if we have a look here at Paysafe versus its peers, so you can see that the big players and heavyweights in the sector, obviously PayPal and Nuvei, and then you've got integrated payments and traditional payment systems there. You've got e-commerce capabilities. Paysafe rates itself as matching PayPal and the other major company, Nuvei, in that one. You've got a two-sided network, only PayPal provides that one. You've got vertical focus, only Paysafe provides that. It's global. PayPal does offer the same thing, but Paysafe is also rating itself as doing that. And then risk management, Paysafe is rating itself as being the best in the sector, being able to do that, closely followed by PayPal, and then the others fall in behind. So this is really good to see as an investor. Paysafe is already PayPal, make no mistake, is the market leader 100%, but Paysafe is nipping at its heels and at the moment has just a fraction of the valuation. So if Paysafe can move through, take a slice of market share and then start capitalising on that revenue, obviously its share price is going to grow. I mean, currently we're only at $14 a share, and if anything like PayPal is to be believed, then even getting half of that ultimate valuation, you're going to be bringing in a pretty significant return on investment. So you can see the valuation network there. You can see the sort of companies it's competing with and taking it to in the sector. So you've got the likes of Shopify, Square, PayPal, Nuvo, and then the other companies as well. And they all sort of hover up and down this sliding chart that you can see here: traditional payments, integrated payments, e-commerce leaders, and commerce enablers. So going forward, you can see that Paysafe has got significant opportunities to broaden its horizons. This cash injection that is coming from Foley Acquisition Corp, Foley Tresamine Acquisition Corp 2, is going to give the company that much needed cash injection that is going to be debt free, that it needs to really start taking the battle towards the likes of PayPal. And then as it's already a set up company, people are already using it, it's just about accelerating that growth right now. And you can see that Foley has got the track record and the proven track record of that to be able to return massive value to investors like ourselves. So I'm usually with speculative and SPAC plays, you sort of get your money in and then maybe take your original investment out and then ride the rest of it out and see what money you can make, and then obviously maybe cash out later on down the line. That is the traditional play. But with this company, because it's a bit like Tattooed Chef, as I mentioned, there's already a product, it's already got so many customers, it's already turning over significant revenue. I see this differently. I see this as being able to get in right on the bottom rung as what will be an absolutely fantastic company. You can see the guy's got previous history of doing this, so why not get in on the bottom floor and take advantage of this over the long term? Yes, you could make some money out of it in a short term play by just riding the hype, but you can also make yourself a significant amount of money over the longer term as well, just by buying and sitting and holding and letting this company develop. And that is exactly my plan with this business. I plan on buying as many shares as I can while it hovers below the $20 margin or region, and then just sitting on it and letting them grow through to 2025. We know that the company is going global over the coming years, so it's going to be absolutely fantastic to get involved and take advantage of this. And all you have to be is patient, essentially. Just sit on the shares and just wait for Foley to work and the company to work its magic. I hope you've enjoyed today's video, guys. It's been absolutely fantastic to delve into this stock because it's just one that I'm going to add to my portfolio. So I always share, especially the real diamonds that I find with you guys. It's been an absolute pleasure. If you could see your way to liking the video and subscribing to my channel, that would be fantastic. And hopefully I'll see you in the very next episode. Catch you later.